Good Fed Day, Warriors. This is the day. Good morning, Claudia and Glenn. Good morning, Blake, Joe, Steve, Baloo, Andre. What a team. Paulie's in here. Okay, so it's all about the Fed today, right? And we all know yields have been dropping like a stone. So I thought I'd focus on interest rates going into the Fed today, because I've been looking for this for a while, some shorter term stuff. I was looking for a new low. This was a 1 and a 2, and we held the previous low here, and we're getting a 3. So the only time frames where I'm not getting non-confirmations like the 1 hour and shorter term, but if you go even to the 2 hour, you can see that we did diverge, and the 4 hour did as well. I've been talking about TLT up to about 133 or so. Jim Walsh talked about that being a good short zone. That was achieved on the opening. So here we are on the 4 hour, and definitely non-confirmation. Here was your confirmed low, and it diverged here, and it diverged here. And on the daily, you have the same thing. On the daily chart, you have a falling wedge. We had a throw over here. It tried to break through the throw over about 5 days ago and was rejected. And here you can see on the daily, there's some divergence. I'm not saying that we can't make another charge down here towards 2%. I believe bond DSI is 90. It's only going to take for a weekly reversal, closes on the 10-year back over this close, 209. 209, you have a 2-week reversal. And I would say if we were able to achieve, after the Fed getting back inside the falling wedge, that a bond short is viable. For how much, that would be open for debate. Just a quick look at TLT, which, you know, a lot of people don't trade futures. Anyone in here trade like 10-year futures or CFDs on interest rates? So, you know, I've been giving people ETFs to trade it. And here's a TLT. Okay, there's the daily. You know, we had a confirmed high. Maybe this is only drive 2 in TLT. It's 20-year paper. Okay, so that's the daily, the weekly. You know, how we finish on the week's going to be important. TLT had a throw over 2, and that's going to come in around 129. Here's your 4 hour. Pretty glaring divergence between these highs. So there's your example of TLT. The opposite, you know, I'm not an expert on ETFs. I just know some of the basic ones. So the opposite of TLT is TBT, for it's a bearish ETF on TLT. And here's TBT. And looks like it's diverging. And just, you know, take a look at the weekly to see what kind of potential there could be. So this was last year, right? When we were at 3 1/4. So anyway, it's a very contrarian call, but I think that rates are troughing here in the US. Be alert for that. Something else I wanted to alert people to, and you know, I got out way early when I was bullish crypto back here when we held the 78.6 back here, and I bought GBTC for 4 and sold it at $7. It's now 12, but just wanted to show some crypto players here. You do have a 3 drive developing here. Here's 1, 2, 3. And if you drill down sometimes on the 3rd drive, which is what we have here, you could end up with a fractal, and that would be 3. So one more charge. The message to me in Bitcoin, as your coach, if you look at me that way, take something off the table. Okay, so be alert for that. I know a lot of people are saying we're, pullbacks only take us to 8,500. See what the weekly looks like. Yeah, nice run. Anyway, we'll have Mark Yusko there here with us tomorrow, and we know he's a crypto enthusiast. So see what Mark thinks. And let's see. Do you guys know who works at ForexAnalytix? If you just scoured Twitter and said, you know what, I want to put together a team of some of the best trading minds in the business and have them be part of one service, could you have done any better than this? Pretty good team. Can't navigate markets without a dashboard. Shouldn't go through the day without knowing what Amanda's thinking. Look at that. Rates. Couple active Aussie. Blake is looking at. CAD yen. All the active tickers. Elliott wave. Harmonics. Candlesticks. See what Andre thinks about. I know Grega, when he was here, was kind of constructive. Euro here. Andre has a deep crab possibility unless we hold the butterfly. All right, interesting. So, it's great to have at your fingertips, say you're considering a long in the euro or something, I wonder what Andre's thinking. Now I know. I wonder what Greg is thinking here. Here's his 4 hour. So this is kind of what he showed. So he's constructive euro. Okay. And Andre has one constructive count. So there's, that's pretty counterintuitive to the way the market's thinking. I don't know. I'd like to know what Blake is thinking here too.
Who's Blake?
Oh, here he is.
No, that's
a picture of Blake. he
me.
went to the edge of the galaxy and was transformed into a candle.
I have in my office a picture of Blake and his family. I have in my office how is that called? That doll.
Oh,
of
yeah,
Blake.
Bobblehead doll
Yeah.
of Blake. They made one of Blake, a bobblehead.
Yeah.
That's that you've made it when they make a bobblehead of you. Hey, Bobble, Bobble, are you bobbling around today?
Hey, I'm here. How you guys doing?
Okay. Yeah, you would never tell us if they made a bobblehead of you.
They did actually years ago. Yeah, it was about I don't know, about 10 years ago when they made a limited run of like 300 bobbleheads. So yeah, got a couple of those. So. Yep.
I'm jealous, Blake.
You made it when you got a bobblehead. That's true statement, I guess. Yeah, well, good morning, Steve. Good morning, Dale. It has been a slow overnight session, obviously. We have just everybody's preparing for the FOMC, so that's the bottom line right now. And the dollar is consolidating its recent gains. And I want to talk about something really quick about the FOMC and what we've got going on today. It's not often that we go into a Fed meeting like today where the market is universally.
Sorry,
Hello?
Sorry, I had to do this. I don't know if you can see the screen.
What? Oh, I can't see.
Oh, I'm sharing the
Oh,
camera.
oh, there. Oh, yeah, there it is. Yeah, I guess we can't see the bobblehead. It is the bobblehead.
Yeah, it is.
Yes,
Yeah.
that's
Sorry, I have this camera attached to my 3D printer, so I had to put it there.
no, that's great. That's when I was younger, actually. So, all right. No, I was just saying that it's pretty rare when we go into a meeting, like a Fed meeting, like we've got going on today, where the market is pretty universally one-sided. The market doesn't believe that the Fed is really ready to start a rate cut cycle, let alone cut today, and also really embark on a dovish cycle. The argument being that the data that we've seen overall has been, generally speaking, pretty good. So the question that most people are asking is, how can the Fed be dovish? And and I agree. I mean, I agree with the argument. I agree with I understand it. I sit here and go, every other central bank, most central banks haven't been raising rates. They've been holding steady. Fed has actually raised rates, given us a cushion, if you will, put some bullets back in the chamber if they need to use them. But why do they need to use them now? What's the catalyst driving the Fed to cut rates at this point in time? And I don't know. I don't actually have a good answer for that. So that's and I think I'm not in the minority. I would assume I'm with everybody thinking the same thing. I mean, if you look at the euro dollar and you sit here and you go, wow, since last year, the euro's gone from, let's just say, roughly 120, 118. Let's just, you can put us a year ago. We were basically at 117, and we've just drifted down to 112. Well, why is that in the euro dollar? Well, the Fed has been, raising rates. The ECB has done nothing. They've kept rates unchanged, and they're signaling that they're, might even cut rates in the future. So it makes sense why the euro dollar has drifted down to these levels. But right now, everybody is universally in the same camp. The Fed's not going to cut rates today, which they're probably not, realistically. I think there's a very small window possibility that they will. But they're also, even if they open the door for future rate cuts, are we really going to get 4 rate cuts over the course of the next year and a half, as the market had been pricing recently? I don't know. It's hard to see it. Again, you look at the data that we've seen in the last couple of weeks, and the last few weeks. It's not horrible data. So, how can the Fed justify that? And that, that's even a conversation that we've had in the chat room with some of the other traders in there. It's like, how can they even be dovish? I mean, is it even possible? Now, the opportunity that it provides us right now is everybody is one-sided. That's the rub, and that's the opportunity. It's the crowded trade right now. Everybody is pretty bullish the dollar, and for good reason. I don't want to say it's for bad reason. It's for good reason. Everybody's pretty bullish the dollar. The dollar index looks bullish. Looks like we could, take out these highs, even though we have this double top and, yada, yada, yada. But the dollar index looks like it could continue its rally. But what if? Okay, and these are the questions that you have to ask on days like today. What if? What if the Fed actually cut rates? Or they probably won't, but what if the Fed really prepares us for a pretty strong easing cycle based on dot plots and maybe some of the verbiage that comes out from Fed Chairman Powell? One of the primary concerns that the president has right now, and he voiced those concerns yesterday, is we have a stronger currency. And the Fed, obviously, I mean, I know they're supposed to be independent. I get it. They're supposed to be. Are they? I don't know. We'll probably find out a little bit more today, I would assume. But, the Fed probably is looking at the dollar as well, saying, okay, if we're too hawkish, we're going to have a dollar that's, might be more problematic for us in the future as we, vault towards 100. And then we're going to end up being on the president's bad side. And, do we really want that political backlash? I mean, it may go unsaid, but it's something that they're at least feeling or thinking, I'm assuming. So the reason why I'm saying all this is because right now the market is pretty one-sided, meaning that there's no way the Fed's going to be dovish. There's no way they're going to cut today. There's no way they can be super dovish. So the only way to be right now is long dollars. I'm in it, and for us as traders, as more predatory type of traders, where we're just looking to make some money on some volatility, I have to take a look at the other side of that equation and say, what if? And that's why today, specifically, we're going to be watching the euro dollar very carefully. And I think what you have to be doing right now is you have to realize that we're in a bit of a descending wedge, but this is a trend line resistance. And I think that if we get a move above like this, 112, let's just say 112.15, and we're not going to do it this morning, it'd be really impressive if for some reason the euro started to break out this morning. But we have so many options. Like the first thing that was said when I jumped on my office conference call, which you guys can hear the chattering in the background, it's me plugged into the office in Greenwich, Connecticut. First thing they said to me was, hey, Blake, you see all the options expiring in the euro today, that expire like, 10 a.m. or whatever, Eastern. Yeah, I mean, it's a huge amount. So the euro will probably stay confined around these levels, around the 112 level, for this morning. But what I have to point out is, later this morning, an hour later, once the Fed actually meets and convenes, if we break above like 112.15, 112.20, my assumption is it did it for a reason. Okay. Now I want to talk about that for a second. Think about why the euro jumps through that resistance. Okay. It's probably for a reason. And if it's for a reason, it's probably because the Fed, the Fed cut, or the Fed is going to, embark on a fairly strong easing cycle. Now, I know I'm looking at the euro dollar right now, and I'm thinking, okay, well, the euro is, this is the level that I'm looking at in the euro,
Blake, excuse me.
Yeah, go ahead.
Your chart's beautiful. I like the confluence between the red wedge line and the blue wedge line coming in at the 78.6 level. If we got a break to those levels and the RSI didn't make a new low, could be a good shot down there too.
Yeah, definitely we could. And maybe that happens post decision. Remember, we have the decision at 11, or I say 11, it's at 11 my time, 2 o'clock Eastern, and then 2:30 is when the press conference is. Yes, thank you.
Yeah.
So of course, the Fed could, which is more than likely going to happen. The Fed keeps rates unchanged. The euro slumps, maybe to 111.
30 pips.
Yeah, maybe 20 or 30 pips, right? Maybe it tests those levels and then bounces. Now, here's the thing: if the euro is breaking out to the upside, and I'm being very specific here with the euro, but I also want to talk, and the only other thing that I'm going to talk about this morning, because if you really want the analysis for all the rest of the pairs that we cover, whether it's the cable, the Aussie, you really have to be part of the ForexAnalytix community, because this way you can read all the analysis that I post throughout the course of the session, and then also at the end of each session on each instrument that we cover. But the only other thing I really wanted to cover before I pass it over to Steve is I want to cover gold, because if the dollar does break down and the euro does break out, what's going to happen in unison is you're going to see this gold market realistically break this big, you know, wedge triangle. You know, if we break above 1360, 1370, gold is gone. And I get, you know, I get all these comments from hold on really quick, let me turn this down just a bit. Okay, so I get all these comments from everybody, you know, whether it's in the chat room or whether it's, you know, on Twitter, and you know, some people try to bark back at me like, you know, it's overbought, gold's overbought, it can't go any higher. You know, I'll tell you what, on the Fed meeting, pretty much you can throw all your technicals out the window at that point. It's going up or down based on whatever the Fed does, whether you like it or not. So you can say, well, you know, the RSI is overbought and I got this oscillator doing this, and it's like, you know, yeah, just toss that out the window, because the market's going to move if it wants to move. And everybody should know that the gold market, if it breaks out, it's probably going to be a pretty big breakout. And if it is breaking out, it's breaking out for a reason. You know, that reason being that the Fed did cut rates today, or the Fed prepped us for a really big, you know, move in rates moving forward. That could be it. And, you know, frankly, if you this is just gold and looking at, like, you know, the daily, and I'm zooming out pretty far. You look at relative strength in gold, where we're at right now, and look at how high we've actually been in history. You can go back to 2016 and look at this high print in RSI. We're, you know, right now we're at 69. We've been as high as 87 multiple times, in the mid 80s on daily RSI in gold. What could happen is gold could trade at 1400 and RSI might still be below these other peaks in relative strength. So think about that for a moment before you step in front of the gold market and say, oh, it can't go any higher, because it can, and it can break out. So again, you know, that's something that I think you should be thinking about if you don't think that gold can go higher, because I've gotten that argument from multiple people over the course of the last couple of days. It's had such a big run, you know, how's it going to break out? Oh, it can break. And like I said, if it's breaking out, it's breaking out for a reason. So if it's breaking out for a reason, we know what that reason is. Then you have to go back to the euro dollar and start thinking, well, why did that happen? Well, you know, there's probably good reason why gold is breaking out. And that's probably the same catalyst that's going to drive the euro back towards 113, 113.40, 114, whatever the case may be. All right. So, and look, I don't know if that's going to happen today. Like I said, chances are it's not. You know, chances are we're going to get, you know, a Fed that's kind of, you know, just leaves rates unchanged. We tee it up for a couple rate cuts moving forward, but we're not super dovish. The Fed's not super dovish, and you know, maybe the dollar, you know, maybe the euro does, you know, drop from here. That's what everybody's expecting, and you know, maybe the masses are right, but if they're wrong, I think you're going to see it in gold first, and you're going to see it in, you know, come through the euro as well. So with that being said, I'm going to ask Dale, and
we have a question for you on something you mentioned. I can answer it if you want, but you know, since hi Blake, can you please explain the relationship of euro and options expiry? Our friend is asking here.
Well, you know, if there's a bunch of euro options expiring near like current levels around the 112 strike, that means that the market's probably not going to move between now and the time that options do expire. It's going to take a lot, because most of the market is trying to confine most traders, especially the ones that are defending these options, are going to try to keep the the euro around current levels for a bigger payout. So they're going to sit on the offer, sit on the bid, and try to work the offer, work the bid to keep prices near current levels. So that's why, and there's so many of them expiring near 112.
They're the house, Blake. They usually win. The guys that write them, so they just pin it. It's amazing how they do that.
Yeah, I know. It's quite masterful, really.
I've been on the other side of it 100 times.
Yeah, and it sucks because you it's like,
and then the next day something happens and they would have paid, and you didn't roll into the next one.
Right, and exactly, and the chances of us exploding in one direction following the options expiration later today is quite high, especially with the Fed. So, those people that wrote options with today's expiration didn't think about the Fed meeting that was happening.
Yeah.
But maybe they did. Maybe that's why there's so many options expiring at current levels, because they knew it was going to be a consolidation going into it. So, anyway.
Forex Gal says that you should have an action figure.
An action figure. That would be funny. As long as I get Kung Fu grip, that's all I care about. Like G.I. Joe, get it? G.I. Joe.
We have one. I just read another question that is quite interesting, actually, very interesting. And don't worry, I'm going to get to the rest of them when Blake goes. I don't know if you want to comment on that, Blake, because it's an interesting one. There is a previous scenario that has happened in 1985, resulting in the Plaza Accord.
Yeah.
Could there be a repeat this time around with U.S.-China trade war? Asks our friend Thomas.
But why? And well, I mean, could there be
to weaken the dollar?
There could be. I mean,
yeah. Although I want to remind everybody here that the Plaza Accord
were a lot of nations cooperating. How's that
a lot
going to
of
happen
nations
now?
cooperated to depreciate the dollar against
D-mark.
the yen and the German mark, but the result was 2 years later. They needed a second accord, this time in France, if I remember, Louvre Accord, I think it was called, to stop the the unstoppable depreciation of the dollar. So keep in mind that every time you do something like that in the markets, there are repercussions, right?
Isn't that when France went to like a two-tier currency? The people had one for domestic use and there was one for international
that was
trade.
an interesting experiment as well.
Yeah, and I mean, what's the chance and you have to think about who's trying to engineer what and why, and to get everybody to agree that we need a weaker dollar is really, at this point in time, only in the best interest of the dollar or the U.S. And so, if
not really, emerging market nations would benefit a lot from a weaker dollar because they have a lot of debt denominated in dollars.
Yeah, I guess that is a good point. But are you going to get how many countries are you going to get to bite off on that? And really, right now it's really target is China, and it's China. I think it's more of it would have to be some sort of coordinated effort against the.
Well, we had Europe with us to do that, and we have opposite interests now. Yeah. Europe would not join a Plaza Accord.
Right.
Trump is not the best in making friends. I can
guys, just some heads up. We got Canadian data coming out here momentarily. We have Canadian CPI.
You want me to grab the screen, or you're going to cover it?
Yeah. So just I'll sit here. I'm not trading the Canadian right now. It's very actually if there's one chart right now that's extremely unreadable to me, it's the dollar CAD, and it's we had a false breakdown. We hit the 200-day moving average, pushed right back into the channel, and now I don't know what to do with it, frankly, because it created a false breakdown and held the 200 days. So now that we're where we're at, I don't even know what to do. But we do have data coming out, so I'll just look at it really quick with you guys. Does CPI just get released? Oh, no, never mind. Here's the forecast. Sorry. All right. Heads up. Okay, a little bit stronger Canadian data, and you can see the dollar Canadian is just breaking down a little bit. So CPI came in a little better than expected, you know, and also the core did as well. So yeah, there you go. A little bit stronger Canadian dollar. It's not moving anything else but the Canadian. We've dropped a nice 30 pips, and I think while we trade below 133.65, that's probably going to be offered. All right, Steve, I'm going to pass it over to you. Guys and gals, good luck today. I'll see most of you in the chat room. If you're a ForexAnalytix subscriber, I'll be there for FOMC. For the rest of you guys, good luck.
Thank you, Blake.
Good luck to you too, Blake.
Thanks.
Hey, Coach.
Hey, how are you, Steve?
Spent a couple of hours late last night changing my router to a conventional one to see if that's going to fix the Zoom freezing screen problem, because I had a hybrid router that combines DSL with 4G. So I'm guessing that might have been the cause of it. So let's see how it goes today. So let me know if my screen freezes at any point. I want to believe that, you know, that's going to solve the problem, because it wasn't a speed issue. So I'm guessing some kind of a conflict that was happening. So first of all, let me say that I don't expect much to move until the Fed, for obvious reasons, right? So you know that and even the USD CAD, we had, as you see, we got quite stronger Canadian data. The CPI was actually significantly stronger, and that's why we see the USD CAD moving lower. Even having to do with the USD CAD, I doubt it that a lot of market participants will be willing to put their money on any dollar pair ahead of the Fed. So I'm not even sure we're going to see much of a follow through, although the CPI data were quite stronger. Keep in mind that we got rejected once again from an area of interest. I mentioned it yesterday specifically, that 34.40 was an area of resistance. But as I mentioned yesterday, and more or less Blake repeated my words, so it's nice to know that he has the exact same viewpoint. I really don't know what to do with the USD CAD. I knew that if we break above this 134.40, I want to be looking for a move higher towards 136.60. But you know, if we fail to do so, I don't know what to do with this false break after this rebound from the confluence of the 61.8 and the 200 DMA. I guess between 134.40 and that level, I don't want to do anything because I don't really have much clarity. I do want to cover questions though, because we have a decent amount of questions today. And I also want to show what in my mind is which pairs, you know, there is a friend here saying, let me pull up the chat. He's saying if, yeah, you know something, there is a reason we use so many ifs, because nobody can guess 100% what's going to happen with the Fed. But what you can do is, you know, notice what is at an interesting level and what is at an interesting technical formation, that once you get a move, you'll have the confidence to follow that move and trade it. You know what I mean? That's the only thing you can ask of ahead of an announced release, with the exception of a few cases where you have the market pricing in something like 99% happening, in which case, you know, it is worth perhaps taking a stab at the other side of the market pre-release, because in that case, if, you know, what the whole market expects to happen happens, then you don't really see a big move, which means that, you know, you can close your position and, you know, at no cost or at a minimum cost. While if what the market is pricing in as a very remote probability happens, you get to benefit a lot. And I'm gonna go through the questions and then show you the pairs that I think are quite interesting points. So one of the questions, and it is an interesting one, is what is happening with copper ahead of the Fed? And since we know how copper is nicely correlated with risk as well, plus of course it's denominated in dollars, I do think that it is worth having a look at it. Here it is. So copper has rebounded, but keep in mind that it is now retesting a horizontal support resistance area once again as resistance. So my viewpoint about the copper, this has already happened, so we can delete it, is that if we get rejected from here, this time we're actually headed, I think we're going to make it all the way to my initial target, which was at 257. Why, if we break higher, I do think that there is a very decent chance that we're going to end up retesting that 285 area. So, not accidentally, copper is at a juncture here. And I do think what happens from here is significant. This will also prove if this recent rebound is simply some type of a, pennant, flag, depends on how you want to draw it, doesn't really matter. Or if it's just, the beginning of something bigger. Okay, so here it is. For the time being, it can just be, a bear flag and nothing more than that. So I do think that copper is currently on a resistance. Even taking a short here, against that level would make sense from a risk-reward perspective. Of course, it's good if you want to combine that with some kind of a thesis behind it. Now, having to do with palladium, I told you a few days ago that my last third got limited out. I could have made a lot more profit on the last third, but whatever. And I do think that we have significant evidence that perhaps we've, found a low here, which means that we have to keep respecting the previous uptrend. Having said that, I would be a little bit careful here because this 1500 area is support resistance area. Okay, so I would be a little bit careful here. I wouldn't be buying it on a resistance, but for example, if you see something like this, back to that support, I think it's probably a good opportunity to align yourself with the larger trend. Palladium consolidating near the lows keeps underperforming the rest of the metals as it has done most of the time. Now, having to do with gold, I know that Blake covered it, and I've said multiple times, 1360 is like super major resistance area. If we actually break above that, the market is going to squeeze higher. And as Blake said, it's not going to matter how overbought it is because it's going to prove how much more it can be overbought. There is one thing that would worry me if I was long gold here, and that is the fact that not only we're currently testing, a multi-year triangles resistance, is that we also seem to have formed something like an ascending wedge, just exactly there. So I have to say that, if there wasn't, such a big announcement, a few hours ahead, I would, my plan here would be to wait for a breakdown from this wedge and just sell it. So I would have already placed an order there. The only reason I'm not doing that ahead of the Fed is because the first minute, after the Fed release, you might see, liquidity is going to be very thin, and it's very easy to see some kind of a whipsaw move that initially might be in the wrong direction of the market, get you triggered, and then gold might fly, or the exact opposite, of course, right? I mean, if for the same reason you've put an order to buy a breakout to the upside, it wouldn't be unheard of. I mean, we've seen that many times ahead of announcement like this, to see some kind of an initial spike higher, which within a few seconds will have been retraced, and then a big reversal lower, breaking below the wedge. That's why ahead of these kind of announcements, I don't like to leave orders in place. And if I do so, it would be for a small position and definitely not a full position. Okay, but bottom line, extra reason to be careful here. And the extra reason is this ascending wedge that we have in place. Now, if we definitively break above 1360, I think that we're going to be at 1400 even within the same day. Even tonight, we can be at 1400, and I'm not exaggerating. I know that we don't see moves like that every day, but this is a day that can actually happen. Okay, don't forget that gold is extremely sensitive to real rates, and in essence, the Fed announcement will shed some light of what we can expect in the medium term, having to do with real rates. So, keep that in mind. Now, having to do with crude question, what is happening with crude? Somebody else asked. The answer is I don't know, because as I've mentioned multiple times, the hardest thing to read is how a corrective move is going to unfold. So I have little doubt in my mind. I'm not saying it's impossible, but it's definitely not my main case scenario that we are seeing some type of a correction. For the time being, it looks perfectly like a triangle. Okay, so it can end up like moving lower from here. Keep in mind that this is not only triangles resistance, but it's also horizontal support resistance area that has worked multiple times in the past. So here ahead of the 54.50 area, very nice resistance. Risk reward definitely would favor being short here, but that doesn't mean that this can be the end of that corrective move, because it might unfold to something like more complex, right? So wouldn't be surprised to see something like that. Just completely making this up now, but you get the point. Or find resistance here even better, something like this. And then move lower. So although I'm pretty confident that this is a corrective move higher, I can't have any kind of confidence that this is it, right? That this triangle is going to be it. Regardless, crude is that resistance, and that's something that you have to keep in mind. As you see, it's very frequent that ahead of big announcements, big areas, big levels act as magnets. Okay, so it is what it is. Risk reward favors shorts here, as I said, and that's it. Now, another pair that it's at an interesting juncture, quite equivalent, is the USD yen. Right? Just look at this. I mean, we've had like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, like roughly 12 days of consolidation. The vast majority of those are pin bars or spinning tops. Just look at those candles, those daily candles. I mean, textbook indecision candle, 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 indecision candle. And between them, some candles that haven't found follow through. Bottom line, the market definitely isn't ready to rebound from here. I mean, there is absolutely, have we found a bottom? Yeah, temporarily we did. But did the market produce anything that can be considered as a bottoming formation that makes you feel confident that buying here just because the risk reward ratio makes sense against the lows? No, really not. I mean, anything can happen following the Fed. So this can completely be erased. But if you showed me that chart and I didn't know that we had the Fed ahead, I would definitely be like, okay, I'm shorting this. As simple as that. I mean, this is a consolidation that 7 out of 10 times that you find it gets resolved in the direction of the trend. Okay, now I want to go down to some 4-hour charts, because if you go down to some 4-hour charts, you can not only see what Blake was showing with the Euro USD, here it is, by the way, a possible wedge here, but I keep preferring more the USD Swiss, and here it is, an ascending wedge. Okay, so quite a nice risk-reward ratio here as well. Nice RSI divergence of the 4-hour chart, clear loss of momentum, near a confluence of resistances at parity, barely holding this wedge support, and very likely will keep on doing so until Fed time. I like it to the downside. So if for some reason the Fed is dovish, preparing the market for a rate hike, I never said what my assumption is, by the way, of what's going to happen today, although my assumption is completely worthless in the sense that it's just an assumption, right? And putting money on assumptions makes no sense. But my assumption, because I have an assumption, is that the Fed very rarely fights what the market is pricing in. That is why I also believe that the Fed was dragged to hiking rates simply because the market started pricing in rates. I strongly believe that the Fed would have never hiked rates in this business cycle if it wasn't for two things. Number one, Trump got elected, and Trump's election bought the market time by bringing in confidence and fiscal stimulus, because what Trump did with cutting down taxes was fiscally stimulating the economy. So that was something that, until a few days before Trump got elected, nobody expected, because I remind you that they were pricing in like more than 95% chances that Hillary would be elected. So I do believe that if Clinton was elected, the economy would have already been in a recession. What bought time to the market was Trump being elected, which was completely unexpected, fiscal stimulus, which helped supplement what monetary policy was doing for some time. Unfortunately, nothing lasts forever, especially in such an old business cycle. So what ended up happening is that once the effects started running out, the economy started showing signs that, first of all, it couldn't cope with the rate hikes because the underlying pillars of the economy are not, strong enough. And the Fed, of course, has access to a lot more data than we do have. But clearly, when the market started tanking at the end of last year, we started seeing data going bad as well, and that could really escalate very fast. So now, since there is no more fiscal stimulus probably coming, they have to supplement that with monetary policy. So zero rates again, quantitative easing, etc. Is it going to be enough to save the economy from going in a recession? In my mind, no. I think that Trump is smart enough to know that. The only thing he's trying to do is prolong it, if possible, until after the election next year. Okay, in my mind, there is 0% chance, and somebody should never say 0% chance, but I'm going to say it, that if Trump gets reelected, if we make it there, he's not going to have a recession in his hands during his second term as a president. 0% chance in my mind. And in my mind, there is even a low chance that we're going to avoid a recession until then. But, with a lot of monetary policy and a little bit of a luck, not getting something bad happening, might happen. So the market is not pricing in cuts at the moment. I don't think they're going to deliver a cut at the moment, but if they want to deliver one as is priced in for the next meeting, they have to prepare the market, during this meeting with language and everything else. So I think the chances are that we're going to see some dovish language and, hinting that, they're close to doing that, but not doing anything today. Okay, and I think that's more or less what the market is pricing in at the moment. I very much doubt it that they're going to jump the gun and cut today. I think it wouldn't even benefit what they want to do, because I think that if they actually unexpectedly cut earlier, the market would be very much afraid that, something might be a lot more wrong than they realize, because why else would the Fed go against market expectations just for, I think the next meeting is in 1.5 months from now. So why would they jump ahead just, to save 1.5 months? So, even for that reason, I don't find it quite likely that they're going to cut today. Okay. But, that's all that is, it's educated assumption. So as I said, don't trade out, based on that. Going through questions, give me a second. How do you think the Kiwi yen will react to the Fed? That's a good question. We can have a look at the yen pairs. So you think palladium is now a buy and will not revisit 1300? Okay, let's briefly go to palladium and I'm going to let you know. Let's have a chart in front of us and I'm going to let you know. So do I think that palladium is a buy? This is a 4-hour chart, by the way, of palladium, right? And it's not going to revisit, you mean this 1270. I think it's likely. Yeah, I think it is very likely, actually. won't revisit. Won't revisit soon, obviously, right? Because that doesn't mean that it can't revisit. Like, yeah, I think it's a decent case scenario that we've actually completed a corrective move lower. Gregor has said it also from an Elliott wave perspective. Usually, when you see a rebound that is initially channeled, like you see here, so up to that point, you can say, okay, this looks like an orderly corrective move. Once you see that kind of a move, though, this one, that goes vertical and penetrates through it, then you know that you have an impulsive move in hand. So yes, I think the chances favor of a continuation higher, and probably a nice level to try to buy is roughly 1440. Okay. Won't EURUSD go down until 111.28, then go up again? I mean, how can I answer that question? If somebody could speculate on the market, so precisely, like, it's going to go down by so many pips, then go up again, we wouldn't be here. I would be a gazillionaire. You wouldn't even need a lot of money to make like tons of money. I can tell you as a fact that, as Dale said, there is more room for a little bit of a downside. I mean, and maintaining the wedge, right? So yeah, an initial move lower from the EURUSD is also likely, even if it ends up breaking up, right? So now confluence of supports at 111.60 actually. So I would be looking more towards that area, that level. Now let's have a look at the Kiwi yen, since our friend asked for it, and the Aussie yen, by the way. Let's have a look at both of them, and then I'm going to go through some of the crosses because they're going to be the less affected, so you can even trade them before that if you want. So Kiwi yen struggling to hold the 61.8 from the spike down. Okay, it has already overthrown this descending channel. That was a nice hammer yesterday. So an initial reversal candle. Is a reversal candle enough to to be bullish something? No, it isn't. As simple as that. A single candlestick is not enough to get you to go against the trend. As simple as that. Of course, somebody will say, yes, but you saw that candlestick on the 61.8. Yes, that is correct. We also have a technical level here. Is a single candlestick and a single fib enough? In my opinion, no. No, at least, they don't tick the boxes that I need. Okay, so I would definitely need to see a lot more to believe that something bigger is happening. Until then, for example, the previous low was here at 75. So as long as we remain below 75, there is nothing bullish to talk about here. There is a hint that perhaps something is going to happen. So if today we see some like big candle to the upside, then we can start saying, okay, we got a hammer at the 61.8. We got the Fed with whatever they ended it up saying, moving the market also in that direction, and we got some nice follow through. Okay, then we can start, approaching this as, with a more constructive set of eyes. Until that happens, it's very, very dangerous to try to trade this. Okay. Let me find now. This is the Aussie yen. Let's go to the Kiwi yen. There it is. Kiwi yen. Indecision candle the day before yesterday. Nice outside white candle yesterday. So a nice reversal from the 127% extension. But as I said before, is that enough to actually turn bullish from here? No, I would need to see more. Okay, we also have some daily RSI divergence here, you can see it. So a third element as well. But I would still need to see at least one more day of follow through. Okay. So yeah, they are candidates for a likely reversal higher, but I think you need to see more evidence. And trust me, if they're actually reversing, don't worry, there's going to be a lot more upside. Until that happens, I would definitely not find it impossible to see another move to the downside towards 69, 69.30. Okay, so keep that in mind. Now, another pair I wanted to show on the 4-hour chart, because I do think that it's on an interesting level ahead of the Fed, is this one, USD NOK. USD NOK has also recovered in what looks like a wedge, and I wouldn't be surprised if it broke down. Keep in mind, though, that even if the USD not breaks down below this wedges support, it's already doing so, but I'm not paying so much attention to it ahead of the Fed. We have this 860 area, which is like, very, very critical. You can see on the daily chart why that's the case. Simply because that's, a range of support for some time, but most importantly, because it's the trend line support of this ascending channel that dates back to February 2018. So, even if it fails from there, 860 still is the level you need to be watching before you actually, jump the gun and, start shorting this. Until then, if you want to do it like as a shorter move, sure. You like this wedge, you can, sell it, put a stop loss above yesterday's high and target 860. It makes sense. I mean, from a risk reward perspective, it makes 100% sense. You will have a risk reward. I don't know. I just by eyeballing it, it must be at least, I don't know, 6-1 or whatever. So yeah, if for some reason you really want to do it, I told you, how I would be doing it. EA and EN. Yes, anyhow, I promised you to show you the crosses because we haven't had a look at them in several days. So let's begin by the Euro-Aussie. Euro-Aussie, very bearish candle yesterday, right? That was a Marubozu closing black and an outside black candle at the same time. So like key reversal yesterday, right? A key reversal yesterday. That's what we had. So that's a very, somebody can tell me, but before you didn't like just a candlestick to call a reversal. Yeah, because it was just a hammer. This is like, this is a candle that has like triple significance. Like, it's a key reversal. It's an outside black candle. It's a Marubozu closing black. I mean, it's as strong as they get from a candlestick perspective. It's also on the 78.6. It's also, once again, from the previous highs. If you ignore this spike, because that high over there at 165.50, that was a spike. Okay. The actual previous highs were at this zone that we got rejected from once again. So combining all that, I would be very, very, very careful here with the Euro-Aussie. Okay. It wouldn't surprise me if we actually found a high, at least for some time again. So be very careful. A risk reward would favor shorts. More or less the same here with Euro Kiwi. Euro Kiwi, as you see, has recovered a lot less because Kiwi has been stronger than the Aussie. That might also be over and done. Out of curiosity, let's also fib here in the Euro Kiwi this move and also see if we have in hand a fib. Yeah, it's also the 61.8. Let me change it so you don't confuse it with the extensions. So let's make it like this. There it is. It's also the 61.8. So very nice confluence of resistances there and a very, very big candlestick, which completed also an evening star formation. So Euro Kiwi, Euro Aussie, both showing signs that they might have topped, right? Of course, whenever you try to call tops or bottoms, you have like a low chance of being successful, but you have an amazing risk reward in place. So it's like
double-edged sword.
Yeah, it's a double-edged sword, but once you know how to handle it, I think it's worth it. Now, the pound Aussie, I have to tell you that the rebound looks corrected to me. Okay, so far it seems to be recovering today, I mean, but any way I look at it, this rebound higher in comparison to the move lower definitely doesn't look impulsive. So I wouldn't be buying this. I would probably be looking for opportunities to sell it. And the pound Kiwi, if you remember some days ago, I mentioned that 194 area is resistance. It actually acted as one. So in my opinion, that remains to be the case. As long as we remain below 194, 194.20, be careful because there might be more downside. So basically, as you see, I'm very cautious with these pairs. I would rather be selling them than doing anything else with them. Coach, probably I fixed the problem with changing the router, right?
Yeah, you weren't down the whole time.
Okay, perfect.
Yeah.
Nice to see.
Yeah.
Nice to see because I lost some sleep over that.
Okay. Well, you
Um,
solved it, buddy. You're like
good.
Sherlock Holmes.
Good. Nah, he's probably a lot smarter than I am.
Yeah,
He probably knows.
he did a lot of drugs too. You don't do any drugs. Sherlock.
I actually know that I'm going to be mocked, but I've never even tried drugs in my life.
Oh, I won't mock you.
Yeah.
You're a lot. In fact, you know what? You have that in common with our president.
Oh, okay.
All
I
right.
didn't know that.
So you and Donald Trump are in at least one way very much alike.
Yeah, I never found the appeal in trying it. I never found the appeal of being,
You
outside
found
of.
the best drug. You love for your wife and your family.
Oh, absolutely.
And I forgot. Yeah, you're addicted to trading. You're an action junkie. Anyway, I have Matt here.
Okay, very
Matt's
nice.
here, and great time to have Matt here since
Needless to say, let me announce something. We have the daily roundup. Paul is going to be doing the daily roundup. Usually, it's going to be at the time that we have the Fed.
Cool.
What I'm thinking of doing is doing the daily roundup in his place because I'm not a short-term trader to cover the Fed.
Yeah.
So people
and the
might
chat room, people. So you'll be around for people to ask questions during
yes,
the
of
Fed.
course.
And Blake in the chat room.
I think all of us are going to be there
All right.
for trading the Fed. So obviously you can we'll be in the chat room covering everything, issuing alerts. Depends on the price action. We might even issue new patterns in play, but because we expect some clarity to put more patterns in place. So yeah, we'll see you all tonight, my time, but this afternoon if you're in the American continent.
Good hunting, my trading warrior brother.
Thank you, Coach.
All right, buddy. All right, Matt. Thank you so much for taking some time out of your day. Although, I know crypto traders aren't waiting for the Fed. What difference does it make, right? So I'm promoting you to panelists, Matt, and welcome to Face. You'll see a drop-down menu. Let me unmute you. And I should be able to hear you. Not sure if you're going to be sharing your screen, Matt.
Okay. How do I share? Oh, right here.
Yeah.
There is a green button that says share. In that panel. That
He's got it.
Yeah, you got it.
Perfect. You got it, buddy.
Perfect.
We can see you.
All right. So pleasure to meet you.
Awesome. Yeah. Thank you for having me.
Yeah. So it must have been some tweet that attracted me to it. Maybe it's your handle. Why don't you start there? What does your handle mean?
Sure. Okay. So DJ Thistle. So I actually have been a musician for 22 years. I started when I was like 18. So I had my Twitter handle for music, and then I got into crypto quite a few years ago. And I mean,
so you answered my question. I was thinking, and my guess was that music came first before trading.
Yeah.
For you. And let me ask you this: did you look at trading as a vehicle to fund what your real love is, music and producing? And it takes a lot of money to, really. I'm not familiar with the business, but it's pretty capital intensive to do recording sessions, etc. Right?
Yeah, and gear and touring and all that kind of stuff. Yeah, it does. There is a monetary aspect to it for sure. And I was interested in silver and commodities and whatnot. And a friend of mine found out about crypto, and we were at a show, and he told me about it, and we kind of just went into the back, kind of like the green room kind of thing for artists, and he pulls out his computer and he shows me all this stuff and the charts, and I think it was Cryptsy, one of the old altcoin exchanges, and I was just looking at the way that the charts move and how fast and volatile everything was, and I just thought, wow, like this is probably where I should be.
So how long have you been trading now?
So I've been in the crypto sphere for 6 years, and then I dabbled around in silver and whatnot for a few years before that.
Okay, and interesting that the methodology you gravitated to is Wyckoff. How did that happen to you?
I'm not 100% sure. I think it was because I find a lot of like something I've noticed in crypto is that like poker players have really good risk management, and a lot of musicians and artists tend to see patterns and fractals in trading. So I think my kind of analytical mind just saw the math in it all and was seeing patterns all the time. So I just I really got into Wyckoff because of the repetition of market structure.
Interesting. So, do you teach? I notice you now have it's called Coin Street. Is that
Coin Street News. Yeah, we've had that for quite a long time. So I did do more mentoring. I haven't done any of that in the last couple of years, just because my family has grown. We have the kind of core group of guys that we all still hang out and I do updates with, but I haven't been actively mentoring new people at all. And before that, with music, I did teach at a post-secondary music school. So that was okay. It was kind of difficult just because I found there was a lot of young people that want to be musicians, but then once they start learning the technical side of the industry, they're not really all that into it. So I have a lot of respect for high school teachers because teaching adults sucked.
All right, so you know what you know what you like, and
Yeah.
So it's important for people to know that risk management that you brought up. So you talk about good poker players, good traders have the same type of mentality. So yeah, I see you have Bitcoin up here. What is this, like a monthly chart?
3-day. Yeah, I was just pulling up a chart to have something here for you. Yeah.
Oh, I see.
Yeah.
Because the numbers to the right don't make sense to me. This is Bitstamp. Okay.
Yeah, I guess this would be the all-time, or not the all-time, but the last 7 years on a log scale.
Oh, okay. All right. So we're looking at this. I guess the key question that everyone's asking is this a bear market rally in crypto? Or is this a resumption of the bull market and the 80% decline was the end of the bear?
Yeah, I think that this is the resumption of a new bull market.
Okay.
I think if we were to go like this is an index for Bitcoin that includes the Mt. Gox era back here. So, and I think we'll see, I use this kind of 1, 2, 3 blow off top as a wave, and I sort of see the 1, 2, 3, 4. We're doing it up here again, and I think that we're starting another 4 wave, which would be sort of the fourth of a fourth, and that would be sort of the mass adoption cycle as I see it, and with what's happening with Facebook and Libra and all that kind of stuff, and seeing all the interest from PayPal to MasterCard. MasterCard's really been into the space that would make sense, that if we are on this, fourth version of a 4-wave push, that this would be the start of an important rally.
Do you also pay attention to altcoin spaces? Obviously, this is your bailiwick. Do you spend most of your time completely in this space, or are you also looking at currency and metals?
Yeah, I spend most of my time, I guess, in the crypto space, and I think that my account got popular because of altcoins, quite a few years back. But even though, because when you mentioned Wyckoff, the Wyckoff GAN, and also Livermore's parabola type theories, I find are really applicable to altcoins. So I applied that to altcoins and kind of got a lot of followers that way. So I do like the altcoin space, but regardless of that, I tend to hold most of my crypto holdings in Bitcoin. I usually don't go past, 20% is usually my market allocation for altcoins.
Okay.
Because they are so volatile, they're like trading a penny stock. So if you're going to be overexposed, you're going to have huge drawdowns. And like what everyone's seeing right now, we've gone off of the bottom at 3,000 and gone up basically, you know, a triple, and altcoins aren't doing anything. So everyone that is deep, you know, over 50% of their holdings in altcoins is losing money right now. So
yeah, so you know, in that type of environment, I would call that really like people just buying blue chip stocks, right? So they're in the majors, right? They're in Litecoin, Ethereum, and Bitcoin. And what you're saying is after the decimation of the altcoins into this year, they have not recovered.
Exactly. Yeah. And I think what most people are waiting for is if you see like on the chart, like let's say in here, let me change this color.
And I wanted to ask you, when you look at altcoins, you know, I'm mainly technical. Do you really have to know a lot about, you know, white papers, and you really have to do your fundamental research too? Because when you say they're like penny stocks, I remember, you know, bulletin board things, and, you know, actually what made them move weren't the fundamentals, but bringing in, actually going out and giving people shares. So maybe they give coins to people to promote it and bring in volume to the coin. Is that what happens in altcoins?
Yeah, that can be one thing that happens. A phrase I like to use is a rising tide
Lifts all ships.
Yeah, exactly. And I find that happens in crypto. My guess is because there's not a lot of liquidity. You know, like a lot of altcoins have very thin books, and it doesn't really take a lot to move them. So the cycle would be something like this, or let's say
they kick in during the tail end of this bull move.
Yeah, and that's
right?
kind of what I was trying to draw out here on the chart, was a couple places where you see, you know, extended flat, you know, extended sideways, or after new all-time highs is when we tend to see altcoins move the most. And that tends to happen 3 times a year. Usually the biggest move would be accumulation around Christmas time with a sell-off closer
So people are what? Are they taking tax losses like they would in any other asset class?
Well, here's the thing: is I have found that crypto is completely cyclical. There's a 235-ish day rally cycle that you see in a lot of different market cycle that you see in a lot of different altcoins. And there's really
is that wick off, or is that how did you come up with that number?
That's just
noticing it.
Yeah, just noticing it over and over again.
Okay. Observation is a great teacher, isn't it?
It is. It really is. Like a lot of the people ask me about my kind of cycles and GAN theory with crypto, and they ask, well, where can I read about this? And it's like, well, there's nowhere to read about it, because it's just, you know, 6 years of watching the charts and noticing, okay, well, every you know, like Dogecoin, most of the time does 30 days up and 200 days down, 30 days up, 200 days down. And in the middle of the 200 days down, there's a relief rally in the middle. And I noticed that a lot of those different cycles tend to, not all the time, because
nothing is all the time.
Yeah, and new all-time highs shifts things a little bit. But in terms of the general play of the market, sometime around winter solstice often becomes an accumulation point with a sell around summer equinox. That would be the big rally for altcoins.
You're talking my language, buddy.
Yeah, and then,
you know, it's interesting, you know, that you think it really has. You really delved into the masters, many of them from the 30s. You know, do you think it has anything to do with being a long hair that you would look into the most esoteric type of analysis for the markets?
Yeah, you know, I don't know. I've always been open to that kind of stuff, and my wife is actually quite good with astrology and stuff like that. So I was fairly skeptical. Let's take this back like 15 years, and I think we I used her. So she's into Magi astrology, like the Bible, the Magi, and they have like.
So are you guys preppers?
Not really. I'm prepared because, you know, anything can happen, and you should have at least you know, some food and all that kind of stuff aside. But I'm not as preppy as I used to be.
Okay.
Yeah, I know what you mean by prepper.
All right.
Yeah, and so she, I think, she was telling me stuff about astrology, and I was doing some sports betting. So I think I used her computer program and did some back testing and noticed some stuff with a couple different planetary alignments. And then we like won the fantasy football pool at her work, and then I betted some more, and I was like, okay, so this stuff, you know, actually works. And then started applying it a bit with markets, which of course, you know, traditional traders were never fond of that sort of outlook. But over the course of time, I've made some pretty, you know, pretty spectacular calls.
Let me ask you this. Do you have a tinfoil hat and sit underneath a pyramid?
Yeah, no, I'm not too tinfoil hat. I don't think that my viewpoint is that planets don't make people do things. I think that we all perhaps come, you know, like maybe there's a universal source of energy or consciousness or something like that, and the planets are just the biggest fractal of that energy, and it's a fractal that we can see in this physical world, and it's just so big that it's just so easy to track them. So I'm sure that there's a way to do quote unquote astrology with the bugs in my backyard, or who knows what it is, but that would just be too hard to see and notice and find patterns. So people look at the planets. So I don't think that there's anything, you know, I would never say, well, Saturn made me blah, blah, blah. No, there's some kind of vibe out there. And just like how the moon affects things, and we've seen, you know, moon in the silver market, you know, there's a lot of lunar traders out there.
Yeah. I'm a lunatic.
Yeah. So to me, it's just cycles. It's not, that's it.
Cool. Yeah. And it's interesting. So we have the solstice coming up. Are you looking for any trend changes going into it? It's, I think, what, 2 days away here?
Yeah, so my experience with crypto, like Gann was really big on the spring equinox for stocks.
Yeah.
And there's kind of been this, you know, joke years ago that crypto is kind of like, you know, like the opposite of stocks, right? You know, like just kind of do the opposite.
Like a negative corollary investment, and it's not. Yeah,
right. And
what is it?
I have found that the pivot for crypto is actually the autumn equinox, and a lot of times on charts you'll see that if you can get you know, some sideways or a higher low at autumn equinox, that you're going to have you know, that you're going to have a bull market, and you're going to have these nice, you know, 6-month runs. So spring, you know, spring is where you want to see it have some consolidation and not make lower lows, and then autumn is where you want to see higher lows. And I find that the two summer and winter solstices are not as important.
How about peaking on this wave here, Matt? You know, I learned this trading technique from J.R. Hill called 3 drives to a top, 3 drives to a bottom. And if you pull up the daily on Bitcoin, you do have a 3-drive pattern developing. You break it down to a 4-hour, and there might be one more push. But you know, I'm telling people to take money off the table. What do you think up here?
So yeah, I mean, we could see a push
to 10,000.
Yeah, and even, you know, 10,
big round number,
something like that. But definitely, the rally is getting overextended. You know, a Wyckoff kind of view would be that, you know, we've had accumulation. If we look at the volume from here to here, you know, there's barely any red. We've had 1, 2. And like you say, that could be like a 3 pushes on a B band right now, or if we go up to 10, 10, 4, then it would be a proper 3rd drive, right? Then after.
But what did you say would make it a proper?
I would consider, like, what I would consider this right now would be like if I had B bands on, Bollinger bands on.
Oh, okay, yeah.
It would look like what he calls, you know, like a 3 pushes.
Okay.
Whereas a 3 drives, I find that the distance from here to here, here to here, and here to the third leg would be a little more similar.
I see.
So that would, you know.
What do you do with your momentum indicator you use on your chart?
Sure.
The MACD, what do you do with that?
So this is the Stotch RSI.
Oh, stochastic.
And then these bars here are something that I've concocted over the years.
What are they? Well, you're not going to get. I'm going to dig all your proprietary stuff out of you right now.
Yeah, so I won't say exactly. I mean, what they are is not that hard, but it's how to use them. So I find that, you know, like it's most people would be like, well, why aren't your bars green and red, you know, buy and sell? But it doesn't really work that way, which is why I do the blue, because, you know, both bars can work in both directions. So in something where, you know, it's sideways and I see blue, then I'm thinking that we're going to have some
range.
You know, yeah, and then we're looking to buy the dips to go up. And then, you know, a red bar in a bull market is letting me know that on the next push down, I'm buying. And a red bar in a bear market is letting me know that, you know, on my first rally, short it hard and just keep shorting it.
Okay. So, who's we? Are you a Gemini?
Pardon?
You said we.
Oh, we.
Oh, I wonder if you were a Gemini.
Oh, no, I guess the people that, you know, like the people that I have mentored, I've given them the code for this. So, yeah.
I'm just giving you a hard time. All right.
So,
just because I have multiple personality disorder doesn't mean everyone. I'm just projecting on you, Matt. So
that's all good.
Anyway, so you really don't think, well, you think this third drive could maybe set the stage for that pullback into the fall? Because I mean, a lot of stock cycles, and if you're a GAN guy, you know, I've interviewed a lot of sharp people that I've met on Twitter.
Yeah.
And there's one guy, Dax 30, and I think he knows, and maybe you guys know each other, but he has, I believe, he said the most significant turning point of the year coming up, I believe July 18th. It's a GAN date. Do you have anything like that setting up?
I am not looking at a specific date in July as much as I'm looking over here at mid-August at what is called Ghost Festival or Ghost Month. So the Asian market is really, really, really influential in crypto, and Asians are very superstitious towards their, you know, astrology and whatnot. Yeah. So Ghost Month is considered a time not to be over leveraged or be too far invested. And it's not always, you know, when Bitcoin is just in a raging bull market, you know,
they don't care about Casper the Friendly Ghost.
Yeah, as much. Or, you know, maybe it just goes sideways for like, you know, 2 weeks. Whereas right now, and, you know, the other 75% of the time, we're looking at Ghost Month as being a time where stocks might, or, you know, crypto might cool off into. So, you know, let's put this together. We've had this huge, you know, consolidation back here, which is creating support. We blasted through it, and before blasting through it, we made a little bit of, you know, base here. So that lets us know that we have this big, you know, if we had the, you know, the type of trader that had volume bands, you know that there'd be a big band of volume here from over here that's sitting on top of this. And with all that into consideration, I believe, where is it?
So couldn't you get a pullback to that yellow rectangle?
Yeah, so if we were to look at like GAN theory and his kind of 50% move, you see that that 50% move is pretty much bang on with what I would call, like, this would be like the key retail raid, right? Like everyone was longing this, and then as soon as this breaks down, it's just this huge cascade on this one daily, and then it keeps going. So to me, this break here, you know, like, look at that. Like it's the 50% line is literally sitting on that level, which is right in that big thick of volume. So
can we pull back into that range?
That would seem like, you know, if it can get to that, or even at, you know, furthest here and sit on top of these old highs, that is gonna, you would think that would get bid immensely hard, right?
Okay. All right.
Yeah. And that would be kind of, I don't know, worst case in a way. And if we were to, I guess, even just kind of go typical trend trader kind of guy, and do something like that.
They come in in August together.
Yeah, and and here's the thing is, let's say,
So it won't
you
just
go
be Ghost Month. It'll be, can I say it? Ghostbusters.
right. There we go. So
All right.
whether it be a 3 pushes here or kind of like a a little stronger of a completed 3
Yeah.
drives,
Yeah.
if we did come down into Ghost Month and then kind of came up a bit and then made a higher low at Equinox, wow, that would be GAN wise an amazing setup.
So what's your favorite instrument? What did you cut your teeth on?
Yeah, for
Guitar?
music, you mean? Yeah. So
Yeah.
it's for me, it's been all the electronic side of things. Like I started when I was really, really young. So my dad was a guitar technician, and
Okay.
it was on the road with bands and stuff. So I was, open to, I played the drums a bit when I was really little, and then some guitar in high school. But then I found the electronic music, and you can make so much yourself just on the computer, and I really liked turntables, and then scratching and all that kind of stuff was really
you DJ too. You ever KJ?
What was that?
Ever KJ?
No.
Karaoke jock?
No.
Couldn't handle that, huh?
Yeah. All I've done is clubs and festivals and things like that. Yeah.
What's the closest instrument you have next to you right now?
I guess about 2 arm lengths away, there's a turntable.
Okay. All right. Well, I tell you what, Matt, I was going to have you, take us out on an outro with a great riff on the guitar, but I don't know. I don't know if you want to start scratching for us, huh?
I'd be waking up the kids anyway. It's so early here.
Okay. Where do you trade from? Where are you?
I live in Kelowna, BC. So it's like in the mountains, halfway between Vancouver and Calgary.
Okay.
So we're West Coast.
Wow, it sounds beautiful up there.
It is, yeah. It's really nice.
Summer yet?
Oh yeah. It was like 34 Celsius yesterday.
Nice, buddy.
Scorching.
Well, really, I'd love to have you back sometime, Matt. Maybe around Halloween or the ghost season.
Yeah, right around Ghost Festival. Yeah.
Yeah, Frankenstein time, whatever, and
sounds good.
And really, I've interviewed, well over 1,000 traders over the years, and I could kind of tell when someone knows. So why don't you show your website and the best place for people to follow you and stay in touch with you, along with your Twitter handle, and show your CoinStreet page here.
Sure, yeah. So we would have that's the main one with most of my followers and all that kind of stuff.
Is that a live picture of you?
Yes, yeah.
Okay. A little like Frank Zappa.
Yeah, thanks.
Come on, you had fun.
And then here's the other one.
All right.
And then here's the other one that's just charts and news and none of my ramblings and whatnot.
Well, you have a blog page too, CoinStreetNews.com.
Yeah, we actually started that in like 2014, and that was very, very current and up to date till the 217 bull run, and then everything got hectic and we just pulled back from the blog. We're going to be starting the blog more, and yeah. So people can check it out and read about Wyckoff and GAN and Livermore and all that kind of stuff. And if people are interested in Wyckoff trading, please check out the pinned tweet on my DJ Thistle account. Last time I checked, I was the #1 Google search for Wyckoff models and the #2 search for GAN 50% rule. So I think it's really awesome that some crypto traders are on those big searches, because Wyckoff theory has been out for 100 years, so I'm really happy to have been able to have a little bit of effect in people's trading.
Really, it's tremendous. I mean, don't you feel so rewarded when you've taught people something and they begin to outperform you?
Yes.
Yeah, okay, you laughed, so I know it happens. So
the student should always pass the master if the master is a good teacher.
Oh, I love that. You know what? We're going to wrap that on that. You're my trading warrior brother now too, right, man?
Bless, Dale.
Okay, man. So I hope pips rain down on you, and everyone that you teach, are also they gain the wisdom that you're sharing with them. And I wish you great success during this time, and really glad that we met each other. And thank you for your time and edifying our community today, Matt.
Thanks a lot, Dale.
All right, guys.
Bye-bye.
So that's a wrap. I'll see everyone. Remember, the chat room is open for the Fed. Good luck on the Fed, everyone. That was Matt. What a great interview, if I must say so myself. I'll see everyone later. Good hunting into the Fed. Remember, don't just count your pips, count your blessings. And you know what else, guys? You know my handle is Forex Stop Hunter. You know why? I know where your stops are. I'll see everyone later. Adios.